He says, Mr. Buffett, you're well known for saying to be fearful when others are greedy and be greedy when others are fearful. But by all appearances, Berkshire was fearful when others were most fearful in the early months of COVID. Dumping airline stocks at or near the low, not taking advantage of the fear gripping the market to buy shares of public companies at exceptional discounts, and being hesitant to buy back significant amounts of Berkshire stock at very attractive prices. I'd appreciate hearing your thoughts surrounding this time and how Berkshire approached its decision-making, specifically after it was assured through the CARES Act that the government would provide a robust backstop to the financial markets.
Well, of course, until both monetary and fiscal policy kicked in, well, you knew we had an incredible problem. And I am, just as Charlie is the chief culture officer, I'm the chief risk officer of Berkshire. That's my job. We hope we do well, but we want to be sure we don't do terribly. But we didn't sell a substantial amount. I mean, we're a company with probably $700 billion worth of businesses. Some we own in their entirety, some we own a piece of, and I don't know whether we were sellers of maybe 1% of the value of all the businesses we had at that period. But the airline, it's just kind of interesting with the airline businesses in particular, and then I'll get to what was done in fiscal and monetary policy. But we had a few people at various subsidiaries of Berkshire that wanted to go in for help from the government, and in some cases they had minority shareholders that owned a few percent, and they said, "Well, this, we're going to get killed by what's happening with the regulations that are being put out, and we're stopping the economy." And they said everybody's going in for them, and why don't we go in? I said, Berkshire can handle it. This is for people that can't handle what's happening, and so we're not applying. But the airlines were the most prominent beneficiaries of what took place immediately. They got $25 billion initially, most of which went to the big four airlines, and some of which went in as grants, not loans. I think that was fine public policy. I was wishing it could go to every restaurant and dry cleaner and every small business that really was out of business and had no. I mean, they were made toast of, basically. But the airlines, clearly, what happened was not their fault in any way, shape, or form. It wasn't like 2008 and 9 when people blamed the banks and hated to see them help. So it was. Now airlines operate in bankruptcy, so it isn't like the three of the four big ones went through bankruptcy within the previous 10 or 15. So the airlines were kind of used to operating in bankruptcy. They would have kept operating, but it was perfectly proper for the airlines to be helped. The entire airline business, you look at these figures of $2 trillion for Apple and so on. The entire big four airlines, they sold for about $100 billion almost. I mean, it's a very, very small. Combined, they wouldn't come close to making the cut. I mean, they wouldn't be in the top 50. So anyway, they went into the government. They needed government help, or they would go bankrupt, some of them, and really the Congress, but Steve Mnuchin too. They decided they deserved the help, which I do not quarrel with at all. But imagine if Berkshire was the 10% holder, which they had been, of everyone in the airlines. They said, "Say get up from Berkshire." I mean, it'd be like one of our. They might have very well had a very, very, very different result if they'd had a very, very, very rich shareholder that owned 8 or 9%. And they didn't have that, when they went in. So you might not have gotten the same result. In fact, I would think you probably wouldn't. I mean, I can just see the headlines now. I mean, because you've seen the headlines on some companies that took $100 million or $2, and really didn't need it, and some of them gave it back, and most of them gave it back. But you're actually looking at probably at a different result than if we'd kept our stock. But in any event, an industry that was really selling for less than $100 billion lost significant amount of money they lost prospective earning power. I mean, right now, international travel's not come back. But I would say overall, too, the economic recovery has gone far better than you could say with any assurance. So we didn't like having as much money as we had in banks at that time. So I cut back some of the bank investment. But basically, our net sales were about 1% or 1.5%. And looking back, it would have been better to be buying. But I do not consider it. I do not consider it a great moment in Berkshire's history. But I also don't. We've got more net worth than any company in the United States under accounting principles, and we've got 600 or 700 billion of generally good businesses, and I think the airline business has done better because we've sold, and I wish them well. But I still wouldn't want to buy the airline business. International people really want to travel for personal reasons, and business travel is another thing. And we've got a big exposure to business travel, of course, through the fact that we own 19% of American Express, and we own Precision Cast Parts, which services the air business very. So we've still got a big investment in air travel, a big commitment to it. But we wish the Big Four the best, and I think their managements have done a very good job during this period.
More specifically beyond the airlines, though, just the idea, and this came from several questions, too, including one from Chris Blaine, just you spent years accumulating cash, insisting you had your elephant gun ready. The March 2020 listed equity sell-off came with promises from the U.S. government that they would do what it takes, yet you sat on your hands. Please help me understand what I missed.
I didn't get quite the last part. What was the final question?
Just please help me understand what I missed. Why didn't you use more of the cash at hand?
Oh, well, we have about, our cash on hand has been about 15% of our values of our businesses, and that's a healthy chunk. And I'd say it'll never get below 20 billion, but we're going to raise that number because it's just the size and importance of Berkshire. But we could have deployed 50 or 75 billion, and right before the Fed acted, I mean, we hit a point where two calls came in, but there was 2 or 3 days. I mean, nothing could happen. I mean, when Jay Powell acted as he did, that was incredibly important. I mean, I should say the Fed acted as they did, but they moved with speed and a decisiveness on March 23rd that changed the situation where the economy had stopped. The government bond market was even disrupted. Berkshire Hathaway probably could not have gone out with a debt offering the day before. There was it didn't get a lot of publicity time, but there was a run on money market funds, a very substantial run. And if you look at the numbers, daily numbers on that, it was a repeat of September 2008. And this time, I give great credit to what Bernanke and Paulson did, but this time, the Fed knew that saying whatever it takes and saying it and demonstrating it, which they did on March 23rd, they took a market where Berkshire couldn't sell bonds on the day before and turned it into one where Carnival Cruise Lines or something could sell it a day or two later. And there was, it's record issuance of corporate debt, and companies losing money, companies that were closed, whatever. It was the most dramatic move that you can imagine. And at the time, as I remember the chairman saying, how about a little help on the fiscal front? And then Congress acted very, very big. Again, in 2008 and 2009, they argued about, we don't want to give any money to those dirty banks and all that sort of thing. But this time, there really wasn't anybody to blame. So they saw what was necessary, and Congress responded. So you had fiscal and monetary policy that responded in a way that was incredible, and it did the job. and I think it did a better job than either the Fed or the Treasury or anybody expected. I mean, this economy right now is 85% of it is running in super high gear, and people can't, and you're seeing some inflation and all of that. It's responded in an incredible way, and we learned something out of 2008 and 9, and then we applied it. But I don't think it was a sure thing that would happen. And the one thing about Berkshire is we don't want to depend on anybody. We're not a bank. We can't go to the Federal Reserve if we need money, and we've got to be sure that under any circumstances, we can't solve nuclear war, and maybe we can't, but. Blanche Dubois, if you remember, in the Streetcar Named Desire, said, "I depend on the kindness of strangers." You can't depend on the kindness of your friends if things really stop. I mean, I've seen that in several different places, and we were seeing it on the middle of March. Everybody was drawing down the credit lines. The banks did not expect that. They just weren't sure they were going to be able to draw down their credit lines 10 days later, and so they just drew them down, and they took the money out of money market funds. We got very prompt. I give great credit on both the monetary and fiscal side of what was done, but I didn't think it was a sure thing that would happen, and I didn't know how it would be implemented. And it's worked. I think it's worked better than just about anybody has expected. And I think, well, you're seeing it now. Charlie's got some views on this too, so we shouldn't leave him out of it.
Well, it's crazy to think anybody's going to be smart enough to husband money and then just come out on the bottom tick in some crazy crisis and spend it all. There always is some person that does that by accident. But that's too tough a standard. Anybody expects that of Berkshire Hathaway is out of his mind.
Yeah, Charlie and I never were very good at dancing, but we really can't do that dance.
No, we can't. And that, by the way, almost nobody else can either.
Not with tens of billions or hundreds of billions. But it's worked out. Well, we forgot to show one of the financial sides, actually, if you go back to the balance sheet. But we did buy in the first. You'll see the shares outstanding if we go back to what is it, E3?
E2. You look.
Slide. Huh?
E2. Yeah.
Pardon me?
I think it's E2. Is it?
Well, the balance sheet. Yeah, there it shows the shares outstanding at the bottom, and we spent about $25 billion in the first quarter and more money since, and it's the best thing. We can't buy companies as cheap as we can buy our own, and we can't buy stocks as cheap as we can buy our own. So, and we've been able to do that with a fair amount of money. But looking back, I mean, if you, definitely we could have done better things. We would have sold airlines and cut back on banks regardless. Whether we should have bought something else at the same time is another question.